Forget everything you've been told about 1-minute trading strategies. What I'm about to show you is so precise and effective, it'll change the way you see scalping forever. Stay with me for the next few minutes and I'll walk you through a strategy that combines momentum, micro pullbacks, and candlestick exhaustion to give you an edge. Let's dive right in. Now, I know what you're thinking. 1-minute charts are noisy, chaotic, and unpredictable. But here's the secret. In this chaos lies opportunity. 1-minute trading isn't for everyone, but for those who master it, the rewards can be massive. This strategy is for traders who want precision and quick results without unnecessary fluff. Here's the game plan. We're targeting momentum bursts, capturing micro pullbacks, and exiting on candlestick exhaustion. We'll use basic tools, candlestick charts, volume overlays, and an optional RSI set to 14 for additional confirmation. Let's break it down step by step. Step 1. Identifying momentum bursts. First, look for momentum bursts. These are clusters of 3 or more strong candles moving in the same direction with increasing volume. Let's look at this example. Notice how the candles are growing in size, and the volume bars below the chart are climbing. This signals strong buying momentum. These bursts are what we'll use to set up our trades. Expanding further, let's consider why momentum bursts work so effectively. A momentum burst often reflects large institutional activity or an aggressive trend driven by strong market sentiment. By identifying and aligning with this momentum, you position yourself to ride the coattails of the market's dominant players. In practice, this means observing how each candle's body, wick, and volume provide clues about market behavior. Notice how the wicks are minimal during momentum bursts, signaling a lack of resistance in the trend direction. Step 2. Spotting the micro pullback. Once you spot the momentum burst, you wait for the pullback. This is where most traders mess up. Instead of chasing the big candles, you wait for a retracement, usually a small bearish candle that pulls back into the wick or body of the previous bullish candle. This red candle is your sweet spot. It shows temporary exhaustion in the buyers and sets up the next move. We'll enter as soon as the price breaks above the high of this pullback candle. Why is this important? The pullback represents a brief pause in the market, often caused by minor profit-taking or temporary hesitation among traders. By entering after the pullback, you're capitalizing on renewed momentum while avoiding the risk of entering at an overextended price. In real-world trading, this requires patience and discipline, qualities that separate skilled traders from impulsive ones. Step 3. Managing the exit. Now let's talk about exits. After your entry, watch for signs of exhaustion. These are typically large candles with long wicks or sudden volume spikes. This wick tells us that buyers are losing control, and the volume spike confirms it. Here's where you can take partial profits or exit the trade entirely. Adding nuance to this step, consider the psychology behind exhaustion candles. Long upper wicks often indicate that while buyers attempted to push prices higher, sellers entered aggressively, overpowering them by the candle's close. Volume spikes add further validation, showing increased activity during this tug-of-war. Using these signs ensures you exit at optimal levels, avoiding unnecessary drawdowns. Step 4. Risk management. Always remember, risk management is key. Place your stop loss just below the low of the pullback candle. For every dollar you risk, aim for at least $2 in profit. Let's expand on this. Stop loss placement isn't just about minimizing losses. It's about preserving capital and ensuring you stay in the game for the next opportunity. By setting your stop below the pullback candle, you're accounting for minor volatility while protecting against larger adverse moves. Pairing this with a 2-to-1 reward-to-risk ratio ensures your winners outweigh your losers over time, creating sustainable profitability. All right, let's see this strategy in action. Here's a momentum burst forming, 3 strong bullish candles, each with increasing volume. Now we wait for the pullback. There it is, a small red candle retracing into the previous wick. I'll place my entry order just above the high of this candle and set my stop loss below its low. And there it is, a clean entry, a quick move, and an exit at exhaustion. Simple, logical, and effective. Take note of how this live trade mirrors the theoretical steps we covered. Real trading requires adapting to nuances, such as slightly imperfect pullbacks or subtle shifts in volume behavior. By practicing this strategy, you'll sharpen your ability to recognize these nuances and act confidently. If you found this valuable, hit the like button and share it with someone who's serious about trading. Don't forget to subscribe to Tradecraft for more hardcore strategies. Drop a comment below if you have any questions or want to see this strategy applied to a different market. Let's master the market, one candle at a time. By following these steps, you'll not only master the 1-minute chart, but also gain insights into market behavior that apply across time frames. The key is consistent practice and a disciplined approach, because in trading, preparation beats luck every time.